Hello guys, welcome back to the next session. This is the most important session of our learning. Okay, so in this session you will be able to completely understand how you are going to trade, how you are going to do the chart analysis, finding a potential entry point, analyzing a stock. Completely you will be able to find it out. Okay, so let's start it. You know how you select the stocks. You will be keeping the stocks in your watch list. Okay, this is area is called watch list area, and you will be keeping your stocks in your watch list. And no matter what terminal you use, okay, everything is the same. But why I use TradingView is because TradingView has some advanced features. Okay, so I would suggest you to do with TradingView. But if you are not comfortable with TradingView, you can use Zerodha or whatever you want. Okay, there are so many videos out there on how to use TradingView. Okay, so let's not focus on how to use TradingView right now, because that is very easy. But what we are going to start right now, we are going to directly to the topic, that is how to do chart analysis. Okay, so let's imagine that we have a set of stocks for our watch list. Okay, you keep it in your watch list. When you open a stock, it's very important that you know the overall view of the stock. I mean, it's not that you just go to 1 minute to 3 minute, 5 minutes and directly go and trade there. Okay, you have to have an overall view of the stock or instrument that you're trading. Okay, so without adding anything, I have not added anything here, just the normal candlesticks. I'm keeping it in weekly time frame. Okay, keeping it in weekly time frame. I'm just seeing whether the stock is trending or ranging. So how do I do that? Just by with your naked eye, you are just seeing whether the stock is in a trending move. For example, it was making highs and it is now on a downward trend. Okay, it's on a movement. It's not kind of choppy. It's not kind of ranging or sideways. It's actually on a trend, no matter where it goes. Okay, so now what you do here, now let me delete this. Okay, so now what you do, you mark the potential support and resistance level. It's as simple as that, and just for your reference, you're not concerned what is going to happen next week. You're not concerned what is going to happen in 2 days, 3 days, and you are not even worried what happened last week. All your concern is what is going to happen, potential things that can happen in the next day. Okay, so on the trading day, so you're marking the probable support and resistances wherever you can. Okay, so here the prices rose and it had a fall, small minor fall from there, and for a period of 4 to 5 weeks the prices are not able to go below this level. So it's 206.95, just for your reference sake. Okay, and you know that in weekly chart it's in trending phase. All you do have to do is only that. On a daily chart, it's not as good as the weekly chart. It's actually on a kind of choppiness. Okay, so if you see the prices are coming down and it is going up, coming down, going up, coming down. Okay, so all you have to do, if you see the past 4-5 days, the prices are in a range. It's this is one day, this is the next day, this is the next day, this is the next day. If you see the prices are in a range, which means that the trading in this stock, it's little bit risky. All you have to do in this is, you have to, just for your reference sake, marking the highs and the low of the previous day. So for example, if this is your trading day, you do the previous day. That is also just for your reference. You are not going to give so much importance, just for your reference to know where actually the prices are. Okay, so let's imagine that you're coming to your 5 minutes. Okay, what you have to do now, you are going to start your analysis. Okay, see here the prices in 5 minutes. This is the November 2. The prices went down. It for some reason. Okay, here also it is being supported, and again it went up, and today it is opening over here. Today it opening over the yesterday's high. But what makes it significant? The body is not closing above this, right? So now let's start our analysis. That let's add everything that we need to add so that we can start our analysis. First of all, you are going to add RSI. Okay, I will explain everything. So RSI is known as the relative strength index. It gives you the strength of the particular instrument. For example, if you are using 14 period RSI and in a daily chart, it calculates the previous 14 candles and gives you the relative strength of that particular instrument that you're trading. Okay, so it will give you the idea of the buying and selling zones also. Okay, mostly people use it for finding the overbought, oversold levels, but we will also use it to find out the zone of the market. So now what you're going to do is you're going to add the Bollingers. And the next we are going to add moving average weighted. And in the moving average we will change some stuff, so I will explain that. And now what you're going to do is you're going to add the volume chart. And then for reference you can also add ADX and DI. Okay, so now what you're going to do, I'm going to explain everything step by step, so there is no point of confusion here. Okay, so first of all, I told you when you open an instrument, first question is what is the trend. Second question what you should be asking is it overbought or oversold level? Is it in the overbought or oversold level? I'll explain. Third, zone, whether it is in the buying zone or the selling zone. Fourth, now you going to check the volume as a clarification, just for confirmation. You're going to check also the market trend. The next, you're also going to check ADX. I will explain. Finally, no matter what sure shot it may appear, you will take only calculated risk and enter into that trade. Okay, so first of all, you're keeping a split up at RSI 50. RSI 50. Okay, just a approximate thing is enough. For RSI 50 you're keeping. Okay, and this is the first candle for the day, right? Now in the WMA moving average, weighted moving average, you're going to do a small change. That is, first of all, you change the color to red or whatever color you want, and in the period, okay, you're going to use the largest 2-digit Fibonacci number. The largest 2-digit Fibonacci number. If you Google about it, you can find it out. It's the largest 2-digit Fibonacci number is 89. You are using that as a period. The next, what you're not going to change anything, any values. Bollinger Band, you keep it as a period 20, and WMA89 volume 20, RSI 14, ADX 1420. Okay, so now first of all, you see here, this red line is your trend line. Okay, because you cannot use for intraday purpose the simple moving averages, exponential moving averages, compared to those things, if you use WMA, it will give you the exact trend of the market. Okay, so of that particular instrument, I can say. So for example, your trend is coming down, okay, and it is going on a downward because the prices are rising from the top. But the thing is, you have three lines here. One is a blue line, top blue line, or the upper Bollinger line. The bottom line is the lower Bollinger line. The middle line is a simple moving average. Since simple moving averages reacts to prices very slowly, we don't use that. Okay, instead we are using the WMA. Okay, so you don't have to consider the middle line, just instead you consider the red line. Okay, now see this very carefully. Your prices are dropping from the top, and you can see the red line. Okay, you can see the red line, and the red line is not closing below the WMA. What you want your candle to close below the WMA. Okay, so it is not closing. If you feel that it is closing, you can consider, but I personally feel it is not closing. If you zoom it, if you use a smaller WMA, I mean if you use the thin WMA, you may feel that it is closing. If you feel that it is closing, perfectly fine, you can consider the trade is still good. But personally, I am not feeling that it has closed below the WMA, which means it has not completely been dominated in the seller's territory. Okay, so I told you there are three lines. One is the top upper Bollinger line, lower Bollinger line, middle, ignore it. The upper Bollinger line, or you can consider that it's an overbought area. Okay, so the top blue line, you can consider it as an overbought area, which means if you get a probable sell trade, which is very, very good. And the lower Bollinger Band is known as the oversold area. Oversold means you will be looking for potential buy trade because it's already oversold, right? So if you get an opportunity at the lower Bollinger Band area, it's very, very good. If you get a buy opportunity at the lower Bollinger Band area, it's very, very good. It does not mean that if the stock touches the lower Bollinger Band, it will not go down. It does not mean that. It will go down. But if you get a buy signal at the lower Bollinger Band, it's very, very good. But see here. Now the prices you have the prices being falling from the top. If you consider this candle and as your reference candle, because the body is closing below, you can still. But what I prefer is the prices are falling from the top, and this candle, you always for a sell trade, what you consider the red candle, right? So this is the candle which is trying to close, but it failed. The next is a green candle. The next is a red candle which is closing successfully below the WMA. But the thing that you have to realize is it is touching the lower Bollinger Band. What it means? It means again I will not go for short here. Why? Because if it is touching the lower Bollinger Band and it is an oversold area, why should I again sell it? Right? So what I do? I wait. I wait for a pullback. So what is pullback? When the price is going down and because of certain condition, I will not go for short. Why? What is the condition? It is touching that lower Bollinger Band. So I wait for a pullback. What is pullback? The price is retracing again, and again in WMA it is taking a resistance. So you see here, this is a candle which has significant meaning towards it, because here this is the previous green candle. Again, after hitting the lower Bollinger Band, the prices went up. But what happens when the prices went up? The bulls were not able to close above it. The bears managed to close below the WMA. So the prices went up, the bears came in and pushed the price downward, forming an inverted hammer shape. Right? So it means that this candle is a strong bearish signal. And the best part is it is not touching the lower Bollinger Band. So it's a variant of continuation pattern. So what is continuation pattern? The prices were falling only. You took an opportunity for continuing that trend, a pullback trend. So that this becomes your, this 955 candle becomes your reference candle. Am I right? So reference candle. But what I have to now check, it's a continuation pattern. I can go in the middle Bollinger Band. It's not touching upper or lower Bollinger Band. I can go for a continuation pattern in the sell because there is still move left. The Bollinger Band is still move left. But the best part is RSI. RSI below 50 is the place for you to sell it. RSI below 50 is a place for you to sell it, and RSI above 50 is a place for you to buy it. Okay, so while I'm taking this trade, I'm seeing the low 218.90. You can see the values, open, high, low, close values over here. So if I'm seeing this as my reference candle, my low is 218.90. I'm going to keep a buffer of 10 paisa and entering at 218.80. 218.90 minus 0.10 paisa, it's 218.80. And my high is 219.50, and I'm keeping a stop loss at high plus buffer 209.60. So 219.50 is my stop loss, 219.60 is my stop loss. 219.50 is my high, 219.60 is my stop loss. My entry is I hope you're carefully getting it. Low is 218.90, so my entry is 218.80. So my order is executing in the next candle. Am I right? So you have a very small risk, very small risk. Okay. So you have your yesterday's low over here, and the prices are continuously beginning to fall. Okay. The moment it touched the yesterday's low, it gave a huge volume and again it broke out. You entered very early itself. The moment it touched the yesterday's low, it again gave a breakout. Okay, and RSI is not able to go above 50 again. Okay, so when you see your risk and your reward is extremely huge in this case. Okay, extremely huge in this case. So if you entered at 218.80, the stock made a low of up to 213 with the risk of just not even 1 rupee. Not even 1 rupee. Very small stop loss. Yeah, okay, so always choose low risk and high reward trades. Always choose low risk, high reward trades. There is no point of jumping into every trade. You're just here with you have predefined levels of yesterday's high, low. You're just knowing that is for knowing the zones. Your prices couldn't make a high above the yesterday's high. It's being rejected. The prices fell. You entered after a pullback. Okay. So why are we using ADX and DI? You see, there are days when your market will be ranging. Am I right? So, but in those days, when you're not able to find a visible trend without indicators in naked eye, so what you do, ADX and DI is going to show the choppiness of the market. Okay, so there are 3 lines: black line, red line, green line. So the black line, and there is a dotted line of 20 period. Here there is a 20, right? 20 level, a dotted line. The black line is there. Black line is just going to tell whether it is trending or not. It's not going to tell whether it's which direction is trending. It's not going to tell that whether the buy side is trending or sell side is trending. All it's going to tell you is whether it is trending. If the instrument is about 20, if the black line is about 20, it means that the instrument is trending. And who is above which color? For example, here red color is above green color. So it means the bearish trend is strong. So if it is trending, it should be above 20. And if red is above the green, it means the red is trending. I mean the bears are stronger. Okay. So it should be used in cases where you are not able to judge the trend by your naked eyes without any indicators. Okay. So the reference candle is good to have a volume significantly higher than the previous days. If you see the volume of the previous days, the current day has a significantly higher volumes. As a standard, we make sure all the trades we trade have a significantly high volume of at least about 25k, the reference candle volume. So this is the reference candle. Okay, this is the reference candle 955. The reference candle, at least we prefer that it should have a volume of about 25k. You can see the volume over here. Okay, but this is a wonderful trade. Okay, so if you're not finding about 25k, you can at least see, compared to the previous days, you have a significantly higher volumes during your entries. Okay, so I hope this pattern is clear. This pattern is bearish pullback pattern. So what is bearish pullback? One second, my paint is opening. So bearish pullback is when the prices are falling because of certain conditions, you will not sure. What is that certain condition? Here it is touching the lower Bollinger Band. So what you do? You wait for a pullback to take resistance at the WMA, and then you will be going short, and this is known as pullback. Perfect. Okay. So now what you're going to see is you're going to see the next trade that we have done. Okay. So ICICI, when I trade, like what I have to do, first of all, I have to see whether it is in a trending phase. Okay, so it's if as a safe trader, you avoid stocks which are not actually in a trending phase. So I'm just marking the resistance zones. You have a significant weekly resistance and supports are most important levels. Okay, so if you see, it's very close to the resistance zone. Okay, so I'm going to go to the daily chart, and I'm just going to mark the important levels. Okay, important levels, for example, you're marking the highs and you're marking the lows. So where it opens has something significant to tell to you too. So in daily chart, the ADX is above 20 and green is above red. So it means the bulls are stronger right now. Okay, don't check RSI over here because we are going to check only in the 5-minute period. Okay, so previous 14 candles will be tested. So now you're coming to the 5 minutes or 3 minutes, whatever you want. Now just before you start the current day, you see what is happening in the 5th. On the 5th, you see the stock is actually on a range. But if you have taken, it's a successful trade only. You would have shorted over here. I will tell that dynamic patterns later. But coming to the 6th, right? 6th, where is the 6th? The prices are the 6th. You are having your opening. Your opening is over. Where is that? This is the opening. This is the opening. It's opening at yesterday's low. Okay, so when it's opening usually at yesterday's low, what you will be thinking? Okay, I am planning to go for a buy, but you cannot just trade like that. Okay, so but what you're now doing, you're just going to mark the 50 levels. Okay, and you're seeing. So you are not getting any trade. Your Bollinger range is too close, which means it's in a range market, so you cannot, when the range is too close, it's better to avoid. But still, as a risky trader, just to explain you the patterns, I'm going to show you. So here, this is the first candle. The prices are going up. Okay, if I'm considering this as my reference candle, you're waiting. This is your WMA, right? So you want your prices to close up above WMA or below WMA. So here it is closing first above WMA. This is the first candle, but it is touching the upper Bollinger Band, so I will not go for buy again because it's already at overbought condition. So I will not go for buy. But even if it is not touching also, what the buffer is also not executing. What is the buffer? What is the buffer means? I'm keeping an addition of 10 paisa towards my entry. So my high is 350.70. So my entry is 350.80. It is not executing here. Not executing here. So I will not go for buy also. Okay. Even if I plan to go for sell, but the candle is not closing below the WMA, the immediate for a dynamic patterns, when there is when the prices are going up at the upper Bollinger Band, it is touching. It's a perfect place for sell, provided the immediate next candle should be closing below the WMA, and RSI should be below 50. Here RSI is above 50. So I will not take this trade. Also the candle is not closing below. So I'm leaving this particular trade. Now I am seeing the continuation. So where the price has started today, it started here, and the first candle which is closing above the WMA is this. Okay, continuation pattern is from the prices where it opened, the candle is going and closing above the WMA, which is this. It is not touching the upper Bollinger Band. It is not touching the upper Bollinger Band, which means it's a perfect place for you to go continuation pattern. Okay, RSI is above 50 level. RSI is above 50 level. And you have a very good volume of 255k. You can, what is the high? The high of the reference candle is, the high of the reference candle is 350.15. So my entry is 350.25. It should be executed at the immediate next candle. Okay. So the reference candle is not touching the upper Bollinger Band. So it's a continuation pattern. I can go for buy from there with the risk of very small risk. The low is 349.15. So my stop loss is 349.05. Mental stop is good. Okay, because the range is very small and stop loss will not hit. But what I'm telling is during the ultra low range, the mental stop loss is good. What is mental stop loss? I'm not putting a real stop loss in the terminal, but I'm just keeping a mental value. The prices shouldn't go below that, and it should able to stand below that. So I prefer mental stop loss in markets where it is too close ranges. Okay, but even if you keep a real stop loss, perfectly fine. You're entering at 350.25. The price has shooted from there with the risk of not even 1 rupee, approximately 1 rupee. Your stock went from 350.15. The stock made a high of 357. 1:7. And when it comes to like seeing above 70 in RSI, is known as the overbought level also for in terms of you can get ready to book the profits. Okay, so when RSI goes above 70 and after it stays above 70 and comes below 70, you can start to book the profits. You can start to book the profits. Okay, so when it goes above 70 and when it's returning below 70, you will start to book the profits. Okay, so risk reward, you have to be very important giving risk reward. You will make a lot of money just if you give importance to the risk reward. Okay, you have a very good system, it will give you the good accuracy, but you now have to understand there are failure trades sometimes. Okay, but that failure trade shouldn't bother you when you have a good risk reward. You will lose only the 1:1. But when it comes to the risk reward, it should be more than whatever you are losing. You should never take profits fast. You should never depend on exiting the trades fast. So you have to start with small quantities. Okay, so this is an example for a continuation pattern. Okay, so now I'm going to show you Ashok Leyland. Ashok Leyland stock in a weekly time frame, it's actually in a kind of a range. It's not actually in a trending phase. It's actually in a closer ranges. But when it comes to daily chart, what you're doing is you're marking the highs and the lows. And one more important thing, if you come to daily chart and see, the WMA is acting as a resistance, dynamic resistance. So dynamic resistance, so the prices yesterday, it hit the WMA, and today there is a high possibility that it can be acting as a reversal. So coming to 5 minutes. Okay, see here, when the market opened, this is the first candle. It opened at the yesterday's high. This is the area where it is opening. The market opened. You do not take any trade. The prices are coming down. But will I go to short here? If you go also, not a problem. It's successful, but that is not the process. Why I will not go? It's touching the lower Bollinger Band. Lower Bollinger Band is a place for oversold market. So I will not again go for short. I will wait for a pullback. So what is pullback? The prices again retraces and takes resistance at WMA. So, and it's forming a good reversal candle. The prices went up, but it's being pushed down by the bears, and it's forming an inverted hammer. And also, what you're checking, RSI should be below 50 at that level, and your buffer price should be executed at the immediate next candle. So you have sufficient time. You are entering only at the next candle, right? So RSI is clearly below 50. Your low is 120.75 of the reference candle 1130. So you are entering at 120.65. It should execute at the immediate next candle. It's executed. Okay. You're keeping a stop. High is high of the reference candle 121.10. You're keeping a stop at 121.20. Okay. The prices should drop. Okay. So compared to the risk that you're taking, which is not even 1 rupee, it's just 45 paisa to 50 paisa, you're getting a reward of more than, it went up to 118.70. That should be your risk reward. When RSI goes below 30, which is the oversold market in terms of booking the profits. Okay, you can start to book the profits when it goes above 30. When it comes below 30 and stays, you stay, and when it goes above 30, you start to book some profits. Okay. So this is an example for a pullback pattern, right? I hope you are understanding this. You're keeping a very small stop, and your stop is not hit anywhere. Okay. But understanding and staying with the trend is the most important thing. Your trend was coming up, it consolidated, and the prices are falling from the top, which means it's a continuation pattern. The trend was uptrend, but it consolidated. You're entering at the exact pullback, going down. Okay. So, and we have certain favorite stocks. We usually every day and check those stocks. You can go select any stock you want, but for example, like Reliance, Bajaj Finance, NIIT, Rel Infra, Rel Cap, Sun Pharma. Okay, so all Nifty index based stocks, we so much prefer those, but only if that isn't trending. Okay, for example, if Bajaj Finance goes through a period of consolidation, we replace that. Okay, in higher time frames. So when I'm going to NIIT Tech, okay, if there is any closer, so what I'm meaning by ranging is on 2017 to 2016, the NIIT on a weekly time frame was ranging. So I don't prefer to trade in that times. But when right now it's not actually in a range, it's actually falling down. Okay, it's falling down. So what I'm doing is I'm just seeing what is the condition of this particular instrument on a weekly and daily time frame. So when I'm coming to daily time frame, if there is any resistance or supports that I can mark, I will be marking that. Okay. So if you see, this is the high and the low, the prices are kind of choppy in a daily chart. Okay, so it's not good to take these stocks. But just to explain you the patterns, but when you have some time to every day, just select stocks which are in trending phase on a daily chart also. Okay, just keep it in your watch list and see whether it is on a trending phase on smaller time frames, how it is respecting our trend line on the previous days, and just keep it in your watch list. But let's go back to this stock in 5 minutes and let's see what happened on 6th. We are trading on 6th. Let's see what happened on 5th. So the 5th, the prices are actually falling. Okay, if the prices are falling, you are going for 6 where it opened. Okay, and I want to say you can even go for a 3 minutes also. Okay, in 5 minutes, so on a 3 minutes, I will explain this. The trend is coming down. Okay, this is the first candle. The prices are going up. The first candle, it managed to close above the WMA, but what it is touching? It is touching the upper Bollinger Band, and the trend is clearly downtrend. So this is a best location for you to sell if you get the very next candle. Very important, the very next candle, if it's closing below the WMA and it is touching the upper Bollinger Band also. This is known as dynamic resistance pattern. So what is dynamic resistance? When the trend is downtrend and the prices are going from below to top and it is touching the upper Bollinger Band, the first candle, it will be rejected by the next candle, okay, and it is closing below the WMA, okay, and you are seeing RSI should be below 50 level. RSI should be below 50 level. Okay. So here RSI is very clearly below 50 level. Okay. So RSI should be below 50 level. If it's not below 50, you don't take that trade. Maybe you can try the next trade. Okay. So your RSI should be visibly below 50. And the prices, what you have to check now? You have to check the low of this candle. So what is the low of this candle? 1200.80. So my entry is 1200.70. Am I right? My high is 1209. My stop loss is 1209.10. Okay. And as it went from there to yesterday's low, which is like huge reward. 175 with a risk of just 9 points, you are getting a reward of more than 25 points if you just consider up to yesterday's low. And also it is going below 30 level, you potentially have book the profits. Okay, the prices have dropped after that. Also the prices made a low of up to 1164, little more points, but you know, the whole day our WMA acted as a very good dynamic resistance. So again the prices went up, resisted the immediate next red candle which is touching the upper Bollinger Band and the WMA closing below the WMA, go for short. But as a safe trader, the first opportunity is always the best. You are entering at the most high that everyone else could enter. Okay, don't again enter into the same script. Okay, so your trade is over already here. Again, don't enter same thing because you know you're entering much later. So do not catch the trend late. If you miss that, perfectly fine. Go to the next. So this is how you have to switch. This is how you have to switch between the stocks, because you cannot have many stocks in your watch list. This is itself too much. But why I'm having this is just to explain the pattern. Okay, I will not have these many stocks in my watch list. But just to explain the patterns, I'm just showing you. Don't keep so many stocks in your watch list. It's very difficult for you to watch during the market time. If you have very little also, it's perfectly fine. So let's go to next one. Okay. So iBull, you know, it's a crazy stock. It gives massive fall and huge falls in between, and it moves very fastly. It's a very volatile stock. So on a weekly time frame, you see whether it is in a movement. If it's in a range like this, you don't take that stock. Okay, if you find potential support or resistance levels, you can mark it. Okay, the prices got rejected at this price 3 weeks before, and it went up. So now it's closed above. So this value will act as a support. Okay, so it was rejected previous few weeks, broke down, now managed to close above this. Again, this price is a support. Resistance will act as a support once it's closed above it. Okay, so now you're going to the daily time frame, and all you're doing is you're just seeing whether it is a tradable stock. So if you see it's not a good stock, when I'm saying a good stock, it should be in a trending phase. But you know, right now the markets are not that good. So when I'm just keeping the highest and the low, high and the low of the day, I'm just marking it, and you can go to any time frame you want. Okay, and what you're doing is you're seeing what happened on the previous day. The prices are the trend is coming down and consolidated. The prices went up. Now the trend is uptrend. Okay, and what you're doing is you are seeing today's opening. This is today's opening. The prices are coming down. Okay, and your trend is saying it's trending up. Okay, and also it is touching the lower Bollinger Band, so you wait for a reversal because this is dynamic support pattern. So what is dynamic support? When the trend is uptrend and it is at the lower Bollinger Band area, the prices are cutting the WMA and the Bollinger Band exactly. The immediate next candle should be closing above the WMA. This is the immediate next candle which should be closing above the WMA. Okay, so this is your reference candle. Alright, so now what you're seeing is you are just seeing whether the RSI is above 50. The important thing is RSI is not above 50 at the first time. It's not above 50 here. So I will not take this as a safe trader. As a safe trader, I will not take this. But the next time I can go. Now it's a little bit risky trade, okay? The next opportunity where I'm getting, this is the next opportunity where I'm getting, it's being supported. But here the prices are not touching the Bollinger Band, lower Bollinger Band area. But you know, this is the first time it supported, and the next, this is the opportunity. Now RSI is above 50. You can take this trade as a risky trade. This is not a safe trade because here itself, if RSI was above 50, perfect trade. But here your RSI was not above 50, so I will not take this trade as a safe trader. I can go for next opportunity when RSI is above 50, but it's a little bit risky trade. The second attempts are mostly a risky trade, but it's here it was successful. So it's how you take the opportunity that is important. So here with the risk of let me see the candle here. Here with a risk of just 3 rupees 70 paisa, the stock from 830, the stock made a high. From 830, it made a high of 844, 843.90. That is a very good risk reward. Okay, so this is how you have to find potential, because find potential entries. But when you as a safe trader, until you're confident, don't take risky trades like this. Why this is a risky trade? Because the first time it did not give an opportunity, because the RSI is below 50. But as a safe trader, if you focus on risk reward, this is a okay trade. But you have, when you take a trade, you have to make sure the important things. First of all, what is the trend? Which pattern does it comes? Out of the 9 patterns, it should be one of the pattern. It will be always one of the pattern. And is it at the overbought, oversold level? So overbought, oversold level is a place for dynamic patterns, dynamic support or dynamic resistance. But the middle Bollinger Band is a place for continuation pattern. Okay. So if you see this, this is the upper Bollinger Band, this is the lower Bollinger Band. Okay. And this is your WMA. Okay. This is your candle. So what you expect? You expect your candles to reverse because it's a dynamic resistance. The trend is down, upper Bollinger Band, you expect a reversal, you go low minus buffer. This is dynamic resistance. This is known as overbought level. So you expect a short here. Similarly, when the trend is, let's imagine this is your WMA, your prices are falling. Your trend is bullish, your prices are falling. It's touching the lower Bollinger Band, and immediate next candle should reverse and it should be closing above the WMA. You will be going for buy. This is dynamic support pattern. Okay, but the middle Bollinger Bands, the prices are falling. You still can go short here because it's a continuation pattern. It's a middle Bollinger Band. It's not overbought or oversold. There is still move left. It can be still going to the oversold market. There is so much of space left. You will be going for short here. But what is pullback? Pullback is when the prices are falling. You do not go for that trade because it's touching the lower Bollinger Band. You will be waiting for a reversal pullback. A candle to take resistance at the WMA and not touching the upper Bollinger Band or lower Bollinger Band. You will be going for low minus buffer short. This is known as pullback. This is known as a bearish pullback. I hope you understood that. The zone, it means the RSIs. It is in the buying zone or is it the selling zone? RSI above 50 is known as the buying zone. RSI below 50 is the selling zone. And volume, we prefer the stocks, any instrument to have at least about 25k of the reference candle, at least check the previous days and see the bars of today. If it is having a good volume compared to the previous days, you can still go. Okay, so what is market trend? I told you in the first session that we will trade only in Nifty index based stock. Okay, Nifty index based stock, I mean, if I'm trading in Biocon, I can go and check for just to see how the pharma sector is also doing. Okay, so what is the overall view, what is the trend of pharma? It's very good that if you check that, go with the market trend. Okay, so when you're getting a short opportunity and if also the market Nifty pharma is in downtrend, then perfectly fine. It's very good to have that habit of checking market trend. ADX, I told you, when the market is not giving a clear trending view in terms without indicators or anything, you go with the ADX and see if ADX black line is above 20, it means it's a trending, and who is dominated is can be found out by which color is being above which color. So if red is above green, it means that the bears are stronger. The bearish trend is stronger. So calculated risk, I mean, suppose your risk is only 1,000 rupees, which ask to yourself, how much am I able to lose comfortably? If I'm not ready with 1,000, go with 500. 500 should be your risk for series of 100 trades. Don't change that. Divided by, your entry price, the price where you are going to buy. Where you are going to exit if it fails, the stop loss. 500 divided by, let's imagine your entry price is 300 minus stop loss is 298. 500 divided by 2. For this particular trade, you will be buying 250 shares only. Okay. So when you check all these conditions, the confluences, you will be having a high probability trade, right? So I hope you have got an idea of how you're going to take entries and exits and all those things. I have shown you so many charts. Now what I want you to do is, I want you to open the charts and just backtest. Do a lot of work. I will be adding you to my broadcast and I will be sending you all my materials to you. But what I want you to do is, I want to watch so many charts. I want you to look into so many charts. Okay. So again, let's do the one last trade, one last stock for us to watch it. So what I'm doing, Axis Bank. So when I come to Axis Bank, Axis Bank has been taken on a weekly support by the WMA. It's giving a reversal, right? It's giving a reversal. It was on a bounce back. In the daily chart, I am marking the highs and the lows, and I'm just seeing overall picture. Okay, it's in a trending phase only. The prices went down, the price is going up. We don't care where it is going. All we need is it has to be trending. We cannot do much in a range mark where it is not moving anywhere. Okay, so on a 5 minutes or 3 minutes, whichever time frame you are comfortable. Okay, many people are not comfortable with maybe faster time frame. Some may feel that 3 minutes is much faster, but it's based on your comfort. Okay, so on a 3 minutes chart, see where the prices are opening, that is more important. Here the prices are opening at the top. So what you can expect, a continuation pattern provided it's not touching the lower Bollinger Band, and it should close below the WMA. Here this is the first candle which is closing, but it is not, it's also touching the lower Bollinger Band. So I cannot take a trade there. Okay. So in 5 minutes, if you see this clearly, the prices are opening above the WMA, and see here, this is the first candle where the body is coming below and it is not touching the lower Bollinger Band. RSI should be below 50. Immediate next candle, RSI is very clearly below 50, it's at 40. This is your reference candle. Just imagine the risk that you're taking. Very, very small risk. For a 600 rupee stock, most probably no one will use 1 rupee stop loss. Okay, the low is 625, the high is 626. So you're entering at 624.90. Your high is 626, your stop loss is 626.10. Just 10 paisa above it. You're entering immediately. From 625, the stock made a low of up to 600 rupees. That is 25. 1:25 rupees risk rewards. Which means if you're buying for a risk of 1000 rupees, you're making 25,000 rupees. So if you're taking a 10,000 rupees risk, you're making 2,50,000 rupees. So that is the risk that reward that I'm talking about. But how do you see when the prices are retracing below RSI 30, you keep the position. But when it goes above 30, I square it off. Okay, also you can trial the stop loss based on the risk reward, which means, for example, if my stock I'm buying at 600 rupees, I'm buying a stock at 600 rupees. Okay, this is my stop loss at 598. Okay, I can trial the stop loss based on risk reward. For example, if my target is my first target is 602, 1:1, I'm keeping my stop loss revised to this cost to cost. When it goes to the 1:2, I'm revising my stop loss to 1:1. You can trial the stop loss. Okay, so this trade was time frame from 10 o'clock to 11:30, approximately 1 hour, but the risk reward is extremely huge. So, and as you see the risk, this is your risk, this candle is your risk, but your reward is extremely huge, so that you don't have to worry if just in any time one of the trades fails. Yeah, because it will fail. Those who project that intraday has no failure, they are actually misleading. Intraday has failure. Technical analysis will fail, but no matter what happens, any particular trade may fail, but you have the risk reward. You follow the system consistently every day, you will follow it and you will be understanding everything perfectly. So this is an example for a continuation, simple continuation pattern. No pullback, nothing, just continuation, semicircle pattern, you can say. Okay, so thank you so much for watching this. I will be adding you to the broadcast and I will be sending you all the materials. I hope you will do well. First of all, for the first 5 to 10 days, don't trade, just paper trade. Watch all my messages in the broadcast. We'll keep on watching it, and after 5 to 10 days, start with very small quantities, like 5 quantity, 10 quantity. Okay, and after that, gradually increase the risk and go on. So thank you so much. Have a nice day.